Welcome back, guys. So I'm going to be explaining as gently as possible how to trade ICC on on this pair here at GBPAD. Okay, so we're going to be trading ICC on GBPAD, but we're just going to be using the levels. Okay, so we see that here above here we had lots of selling pressure. Okay, so above this area over here, price made a huge sell. So this was the start of this huge momentum push to the downside. So this push to the downside doesn't come from out of the blue. That means that there are sellers at this area over here. And what happened is that once those sellers got in control of the market, they were able to push the price up to the lowest point here. Okay, so this was the next level where we saw buyers come into the market. Okay, one of the few areas where we saw that buyers come into the market. And what happened is that price was able to be pushed all the way above this area where we saw sellers. So with that said, that means that that is the first indication that we have that price above this level is able to push upwards towards that level. So what happened is that after price went above underneath, and then once it came above, we also hit that TP on that level. Okay, so what do? You go to your M15 and you zoom out. Okay, what you do is that you zoom out. I don't know if okay, here I found it. So previously you see that the price was forming lower lows. I'm still on that time frame of the H1, so you see that price was making lower lows, lower lows, lower lows, and lower highs, lower lows, lower highs, lower lows. And then after some time, price came above this level. What did we do? We broke structure. Okay, so what trades by side, what he said was most important is that if you're trading ICC and already you're above the level, you don't have to wait for a confirmation. For instance, price broke out of this area. It broke out of this resistance. Okay, so you don't have to wait for price to give you another indication, because you're above the H1 area, you're above the high time frame area. Okay, whereby you know that anything above this area is good for buys. So you would have bought here. Well, you target at the next area of confluence. But I'm just going to be showing you. Let me first move this one. I'm just going to be showing you how you can also capitalize on this move. You see, once price broke out of this consolidation or out of this resistance, we are able to push price until we reach the next area, which is over there where we found sellers. So price again pushed lower. It came all the way down. If you observe, it pushed all the way down until after some time, after some bit of waiting. So this could have been you would have taken your buys here. Okay, once you saw that price was above that level the second time, you would have put your buys. Okay, where would your stop loss be? Underneath this low here. So as long as this low wasn't attacked, then you would have known that price is able to push higher. So all this would have required some bit of patience, and then afterwards price would continue all the way up. So given that information, we saw that price pushed down. Okay, made the first impulsive move down, another impulsive move down, and then it made another impulsive move down here, creating almost equal lows. And then afterwards we had another impulsive move which actually now pushed all the way up to our TP. So here would have been your entry. As I've said, this would have been your entry, because we saw that price came out of this consolidation to make a new higher, to give some indication of a new higher high. Okay, you would have put a stop loss underneath here, and then you would have waited for the sessions. For instance, you may find that this whole consolidation from here up to here was because of the low volume in the market. But once New York or London session opened, what time is this? Let me first see. This is about 1. It's about 8. So this is the Asian session. So this is probably the Asian session, as you can see. Then about here we enter 2.5. Yeah, about here we enter 2.5 and okay, 5.15. So that's 5.15. So that's about the market open. Okay, and then afterwards price keeps pushing up towards the New York session, okay? So going towards the London session, price made this impulsive move. But anyways, you could have waited until price made the New York the market open, and then afterwards you would have taken your entries, because we see that there was lots of volume at the market open. Okay, so here anyways, I was telling you that you could have bought here with a stop loss underneath this low, and then you would have just managed your risk and held price till you reached the first area of confluence, which is above. That would have been your TP. If price went underneath this level once more again, you would have closed out of your positions and then looked for another entry. So anyways, same process here. Price was pushing lower, and then what happened is that price took out this level over here above. Okay, this was the first area because we have a new lower high, okay, and lower low, and then what price did, it made a new higher low, okay, higher low and then higher high. So here would have been the chance for you to take your buy. Stop loss would have been underneath this previous lower low, and then would also aim again for that area over there. Because why are we aiming for that area? Because we saw that the first time that price came above this area, we made a new higher high. That means that if price is able to respect structure, we should also be able to push until we create a new higher high. As simple as that. But I want to cherry pick. You know, when you cherry pick examples, most people feel like you're just repeating what worked out and not what actually happens in the market. But I'll give you another example, a smooth one. What did you realize? When price, this was a huge level of support in the market, okay? This was a level where price came and pushed all the way up. So anything underneath this level it means that sellers are in control of the market, okay? What happened? We see that whenever price came at this area, when price came to this area, we had a massive push to the upside, okay? And what happened next is that price actually came under. The thing with structure, if you observe it from the perspective of what happened before, you can easily take entries. For instance, you see that underneath here, we had another level of support. Price pushed higher. What ended up happening was that price came and then broke structure. It broke this low, okay, to get a new lower low up to around here, okay? So that means that if you're able to take your buys, if you're able to take your entries, you have to just wait for price, because that is the first indication. You wait for the indication. This was the indication that price wanted to sell underneath this level. We broke and made a new lower low. And then what happened next? Price made a corrective move, okay? A corrective move is usually just to take out liquidity in the markets, you know, to push out liquidity, grab orders and stuff. And then after some time, we see that price came underneath the same zone the second time, okay? So this will be the corrective and then continuation move, okay? So this would be your continuation move, and you put your entry here. Stop loss is always above. I always recommend that you put your stop loss just above the candle that broke. That's just above the previous candle before the break of structure, okay? Before price goes underneath this level, you have to put your stop loss just above here, and then you can hold your trades until you reach the TP. But now, if you are trading ICC, one of the most crucial things that you have to master is the art of timing, okay? For instance, if you entered the market way too early, for instance, if you entered the market around here, around this area over here, let me just show you, around here, okay? So price would have made this impulsive move to the upside to grab some more liquidity, and for you, because you have over leveraged, price usually ends up taking you out because you have no clear system, you have no clear structure, you're not following price. So it takes you out, but it does respect the structure above. It never goes above this area of resistance. So price respects this area of resistance and it continues going down, okay? So that means that if you over leveraged, what happens is that price will make this short pullback, take you out, and then continue in your way. While if someone had been patient enough, they would have held that trade with their positions not being limited by the market liquidity grabs, okay? So would have held your sales here. TP would have been around this area over here, but once price gave us another indication, so this is just continuation, just doing the same thing over and over again till it becomes second nature to you, okay? So see that whenever price went up, this was a good area of support. We pushed price all the way up. What happened? Price came and broke this level of support. So what do? Again, you go to the low time frame, the M15, but because it will be disturbing to go back to the M15, I will just leave it to you to always back test. But the idea is that once price breaks out of an area of support, the buyers underneath this area are no longer there. They are weak underneath this area. They are only supporting this level once price goes above it, but underneath the level they are weak. Okay, there are no rules under here, so price can go all the way down here. We just because sellers are now taking control over the market. Okay, so anything underneath a previous low, okay, is good for sales, and okay, as simple as that, and vice versa. So anything above here is good for buys, anything underneath here is good for sales, as simple as that. So once we saw that price after making a break, if you guys can observe, price here came and made a break. Okay, we had the first indication that price was selling because of this candle pushing down, and then what happened next? Price came above the same level. Okay, not completely above, but somehow above. Okay, and then what happened next? Price broke structure. On the M15 you would have seen this, so we would have entered on the M15. Your stop loss is always just above the pinpoint where we saw the break of structure, so this would have been your stop loss above, and then you would have targeted maybe a 1 to 2, and if price continued breaking structure, would have even held the position even longer. But yeah, this entry ended up working actually well. I want you guys to observe also something very crucial here. So say that price was making lower lows. Okay, so anything underneath this level was good for sales, simple as that. And what happened next is that price came and took out this level over here. Okay, so this was another area of major support or major resistance in the market. So what price did, it gave us the first indication, which was over here. This was the first indication. Price pushed up, although it's a minor, it's also considered an indication. So once price pushed above that area, we know that price is likely now to start. We now, in our minds, we know that price is likely to start doing what? Selling, buying, sorry, changing direction. Okay. So once we pushed higher, we had another push to the upside, as simple as that. Let's push to the upside. What happened? Price made a consolidation to the downside. So this was the push of consolidation, and then after some time price came above this level the third time. Okay, we came above this level. So what does that mean? It means that price is now strong above this level. You would have taken your entries. TP just, I always advise that you put your TP just on where we have the next level of resistance, so that in case that price shows you any sign of resistance or weakness, you can easily pull out. I don't want you guys to be rigid that price has shifted structure, therefore you should buy it up towards the next level of resistance. It's not always the case that price should buy all the way up to here. No, we're just following structure. When price giving us, what is price giving us? We saw that it gave us the first impulsive move to the upside. We broke through this high. Okay, this was the first indication, and then after some time price came above the same level, so we would have taken your buy, stop loss underneath here, of course, and then you would have held until we had the next level of support, which is around here. Okay, but if you wanted to hold until price reaches that area, you would have to also be with a slightly bigger stop loss, and also you would have lost because price actually just ended up just making a weakness over here, and then afterwards it's this weakness, or what we call sellers went took over, and then they broke structure here. That means that we have a new level of sellers in the market, which is around here. This is the new level of sellers in the market, and they're willing to push price even lower. Okay, so anything underneath that level is good for sales, as I've talked to you guys about. And yeah, we shall be repeating the same thing over and over and over again. Okay, so ICC isn't some new concept. It has been there for a long time, as long as trading has also been there. So you just have to apply structure, and then afterwards you go with the trend. That's the most important thing. So that underneath this level of support, price usually pushes up to this area over here. So the first time all this consolidation here would have gotten out of it if we knew what zone we are in, but probably I would advise that you always go to your sessions, know when there is volume in the markets, otherwise you will be always trapped in these consolidations. Okay, so you don't want to be trapped in consolidation moves. You want to always be in the moving market. So because of that, I advise you that you take note of the session timing. Okay, session timing is also vitally important. Anyways, we shall go to another pair. So this is a bullish channel or a bullish trend. Okay, we have higher highs and then higher lows, higher highs, higher lows, higher highs, higher lows. So anything above this level is good for buys, because we have seen that that was a level for resistance. Price is pushing higher. So anything above this level is good for buys. Okay, anything above that level is good for buys, simple as that. But after some time, we saw also another level of another level of resistance, and then price broke through it. So anything above that level is good for buys, simple as that. Now we had another next level of resistance over here, but price ended up rejecting and not going above it. So that was the first indication. The first indication that you can ever have in a market is if you have a kind of a nearly double top. Okay, so this is a kind of a double top. We saw that this was the first move up. Okay, price was making higher highs in the market, but then what happened next is that price failed to make a new higher high, and instead we broke structure. So we had the first structure over here, price ended up breaking that structure. But for added confirmation, we would have waited for the structure here to be broken, and that's what exactly happened. Once we broke that structure, price pushed all the way down. So you know that anything underneath this zone is good for sales, because we have seen that the first time that price went underneath this level, we had sales up to here. So here also would enter our sales up to that area of confluence. Okay, and if price continue to break even more structure, would have held our trade until we reach the next level of resistance, etc. So this would have been the next level of support that you would be looking for, where buyers could be present in the market. So after price broke out of this one, you would have waited for price to also break out of this one, and the list goes on and on and on. So if you had held this trade, actually that's how Sai is able to hold these trades for long periods of time, because he's able to master the art of timing. He knows when to get out and into his trades. For instance, for him and for me, actually, what I do most nowadays is that I usually have to wait for price to make and give me direction, not me deciding where the market is going. Most of you traders, especially if you come into the market as a newbie, what happens is that you usually try to predict the market movement by trying to predict everything. You want to know everything that concerns the market. You want to complicate lots of stuff. You want to have 13 different strategies explaining this very simple concept. And the thing about this is that everything that you know about trading is actually bullshit. There is no master guide to trading. Okay, there's no single course that will make you millions in trading. But what you can do always is to apply that little knowledge that you have. You apply it consistently, and you will master trading. Within 6 months, you shall be one of the greatest traders. Okay, so all you have to do right now is to simply put in your effort and practice. Practice is free. You simply go to your charts. You can go to TradingView. They have backtesting software for very cheap prices. You can get a backtesting software, and you can go to FX Replay. So many softwares. You go there and backtest as much as you can. Backtest with sessions, backtest with time frame, breakouts, everything. Okay, so do your best. So yeah, that's it for GBP AUD, and I'll be seeing you guys explaining more videos like this. I'll be making breakdowns. I'll make just one more breakdown. We see that underneath this level, price is selling. What happened next is that price came just now. Here's the thing: